Ever wondered why the US loves credit so much? It's a fascinating question, right? Today we're embarking on a deep dive into the world of global credit systems with a specific focus on the US. From the FICO score to the accessibility of credit, we'll explore the unique aspects that set the US system apart. From its historical development to the role of technology, there's so much to uncover. So buckle up. Let's delve deeper to understand the roots of this phenomenon. The US credit system leans heavily on credit scores, particularly the FICO score. This score, which ranges from 300 to 850, acts like a financial report card. It's influenced by a variety of factors, including your credit history, debt levels, payment history, types of credit, and new credit inquiries. Now let's take a step outside the US borders. In many countries, credit scoring systems aren't as prominent. For instance, some European nations focus more on income and existing debt levels, rather than a detailed credit history. It's a different approach, but it serves the same purpose: assessing risk to make informed lending decisions. Remember, while the US system emphasizes the FICO score, other countries have their own unique methods. And if you're enjoying this deep dive into global credit systems, don't forget to hit that like button and subscribe for more insightful content. These differences shape the accessibility and types of credit products available in the US versus other countries. Access to credit in the US is relatively easy, with a strong emphasis on consumer credit. The American market provides a rich selection of credit opportunities. From credit cards to mortgages, student loans to car loans, the choices are many and varied. This accessibility is largely enabled by the detailed credit scoring system. Credit scores, like the well-known FICO score, help lenders assess the risk of lending to an individual. Now, let's take a little detour and look at the situation in developing countries. Here, access to traditional credit markets can be quite limited. Informal lending, rather than formalized credit, is more common. Credit scores, as we know them, are less prevalent. Instead, microfinance institutions often step in, offering small loans to those who might not have access to traditional banking services. It's a different world, but one that's evolving rapidly. Back in the US, the ease of access to credit didn't just happen overnight. It's a product of historical development, closely tied to the growth of consumer capitalism. This culture of credit was further bolstered by the creation of innovative financial products. In a nutshell, the US credit system is designed to make credit accessible. It's not without its challenges, of course, but the system is continually evolving, seeking to better serve the needs of its users. This ease of access has historical roots and is buttressed by innovative financial products. The uniqueness of the US credit system is rooted in its historical development, innovation, technology, and regulatory framework. Let's start with the historical development. The US credit system grew hand in hand with the rise of consumer capitalism. As the nation became more affluent, credit became an essential tool to fuel economic growth. This created a culture that supports and encourages credit use, setting the stage for the complex credit system we see today. Next, let's talk about innovation. The US has always been a pioneer in developing new financial products, and credit instruments are no exception. From credit cards to mortgage-backed securities, the American financial industry has a knack for creating sophisticated products to meet diverse consumer needs. Now, on to technology. The US has leveraged technology extensively in its credit systems, paving the way for the digital age. Credit scoring algorithms, online lending platforms, and automated risk assessment tools are just a few examples of how technology has revolutionized the American credit landscape. Last but not least, the regulatory framework. US regulations have evolved to promote transparency and consumer protection, while also fostering a competitive lending environment. The Fair Credit Reporting Act, for instance, plays a crucial role in regulating the collection and use of consumer credit information, ensuring that consumers' rights are protected. But the US credit system isn't just about the laws and algorithms. It's about the people, the entrepreneurs who dream big, the families buying their first home, the students investing in their education. It's about the millions of individuals who, every day, rely on credit to make their dreams a reality. Before we move on to how the system handles data collection and privacy regulations, a quick reminder to like this video and subscribe to our channel if you're finding the content informative and engaging. Now let's delve into the world of data collection and privacy in the US credit system. But how does this system handle data collection and privacy regulations? The US credit reporting agencies collect a wide range of financial data, regulated under the Fair Credit Reporting Act. This act is a cornerstone of consumer credit rights in the U.S., designed to promote accuracy, fairness, and privacy of personal information during its assembly and use. It allows consumers to challenge incorrect data and limits who can access your credit report. Things are different across the pond. The European Union's General Data Protection Regulation, or GDPR, places stricter controls on how personal data is collected and used. It's a comprehensive privacy law that not only affects credit reporting practices, but also influences how companies across all sectors handle personal information. Some other countries have followed suit, implementing their own stringent data collection and usage regulations. These differences in data collection and privacy regulations are one of the many factors that make the U.S. credit system truly unique. If you've enjoyed this deep dive, don't forget to like, subscribe, and stay tuned for more insightful explorations.